So good evening. So let's pick up from where you stopped yesterday. So today we are to begin on topic 1 by looking at topic 1. On topic 1, after having that elaborate introduction yesterday. So topic 1, and topic 1 is assurance and non-assurance engagement. Assurance and non-assurance engagement. Topic 1 is assurance and non-assurance engagement. Assurance and non-assurance engagement. So it's also very important for us to get to know what are the key subtopics areas to be covered in that chapter of assurance and non-assurance engagement. So let me give you the subtopics areas which we are supposed to be covering in that topic, topic 1. Done. Ulini challenge kidogo. So number 1 is the concept. The first topic, number 1, is concept of assurance and non-assurance. The concept of assurance and non-assurance engagements. The concept of assurance and non-assurance engagements. The concept of assurance and non-assurance engagements. The number 2 subtopic, engagement letters for assurance, engagement letters for assurance, engagement letters for assurance, engagement letters for assurance, and non-assurance engagements, and non-assurance engagements, and non-assurance engagements, and non-assurance engagements. Number 3 is agreed upon procedures. 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 Next one is a compilation engagement. Compilation engagement. Compilation engagement. Compilation engagement. Compilation engagement. Next item is types of assurance reports. 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 Next subtopic is key audit matters. Key auditor matters. Key audit matters. Key audit matters. Then the next subtopic after that one, different types of audit opinions. Different types of audit opinions. Different types of audit opinions. Different types of audit opinions based on audit evidence gathered. Based on audit evidence gathered. Based on audit evidence gathered. Based on auditor evidence gathered for entities, for entities stroke companies for entities, stroke companies for entities, stroke companies that are exempt from audit in Kenya, that are exempt from audit in Kenya, that are exempt from audit in Kenya, that are exempt from audit in Kenya. So class, those are the key subtopics areas which we are going to be discussing in that topic one of assurance and non-assurance engagement. So let's now do the introduction part of the assurance and non-assurance engagement. Assurance and non-assurance engagement topic. Non-assurance engagement topic. Engagement. The engagement. The assurance and non-assurance engagement. The relevant standards for this is international standards on assurance engagement, is international standards on assurance engagement, 3,000. Is a 3,000. 3,000. That's the relevant standards of this topic, assurance and non-assurance engagement. So before we even go further, we have this word here, assurance. So we need to know what is this term assurance, just the English word for this word assurance. Yes, before we come to look at in audit now, what are these assurance engagement? What do you mean by the term assurance engagement? It's very important for us to be able to know this word assurance. It's a common word we often use, especially when we are engaging with people. I want to offer some assurance. I want to provide some level of assurance. Mean that you want to be very certain in terms of a certain promise of maybe something. Or sometimes you want to boost the confidence of that particular individual. So in that circumstances, we are saying, Pomba, you're offering some assurance. So here we're making reference to, in audit, we're making reference to the financial statements. There are a number of users who are using the financial statements and they want some assurance. They want some level of assurance. They want their degree of confidence to be enhanced whenever it comes to using the financial statements to make certain what? A decision. So whenever the professional accountant is brought on board to provide such kind of services, they fall under category of either assurance and non-assurance engagement. So you have the definition for this word, assurance engagement. Assurance engagement. So I want you to put down the definition of the term assurance engagement. What do you mean by this word? Assurance engagement. What do you mean by the word assurance engagement? Assurance engagement. So let's have a look at this definition. Is a lengthy definition for this term, assurance engagement. Yes, I'm taking a little bit of example. So, okay, let's have this definition of the term assurance engagement. So these are our definition. This is our definition. So you write down the following. Okay, so this is the definition. An assurance engagement is where an assurance engagement is where An assurance engagement is where a practitioner is engaged. A practitioner is engaged. A practitioner is engaged to evaluate or measure a given subject matter that was a responsibility of another party. That was a responsibility of another party. That was a responsibility of another party against a suitable criteria. Against a suitable criteria. Against a suitable criteria. Against a suitable criteria. And express an opinion. And express an opinion. And express an opinion meant to provide the intended user with a level of assurance regarding the compliance of the subject matter with the identified criteria. So let me repeat that definition once again on assurance engagement. So an assurance engagement is where a practitioner is engaged to evaluate or measure a given subject matter that was a responsibility of another party against a suitable criteria and express an opinion meant to provide the intended user with a level of assurance regarding the compliance of the subject matter with identified criteria. So I hope you have gotten that one right on the definition of assurance engagement. Okay, okay, there is now the assurance engagement. We are on the section of assurance engagement. For us to be able to understand it much better, it's good to use a form of analogy to explain the context of assurance engagement. Let's say that we have these two persons here. They have these two persons up who wants to exchange a car. There is a car to be exchanged between these two persons. So one side we have got the seller. You have the seller or the car dealer for this particular car. The other side we have the buyer, the customer. What's the intention of buying the car? So there is a purchase transaction taking place, and also this transaction taking place between these two parties here, the seller and the buyer. So the buyer wants to make a purchase decision, and for him or her to make a purchase decision, he is required to have what you call information. You cannot make a decision if you're not well informed. You do not have information. And we know there is a qualities of a good information whenever it comes to decision-making process. You must look for a reliable information, a timely information, economical information, and accurate information. So you find that between these two parties upper, one person got more information as the other. The seller who is dealing with the cars has got more information as compared to the buyer. There is what we call information asymmetry. Information asymmetry. Information asymmetry. So this buyer is likely to suffer some losses if he ends up buying the car, but it's not in good condition. He's going to lose his or her money as a result of maybe relying on some bad information. So to minimize what we call information risk, to minimize what we call the information risk, this buyer will try to look at someone who can assist him to make a good decision. Of course, he cannot trust the seller because the seller will be trying to protect his or her interest of ensuring that exchanges are taking place. So this buyer will source the services over an expert and the mechanic, a very independent and reputable mechanic, who will come and do the review or evaluation of this particular car and give an opinion. And this opinion is meant to provide some level of assurance to this particular buyer. It can be either on a good side, a favorable opinion, or a bad opinion. By the end of it, the buyer is well informed about the condition of the car, either to proceed with that transaction or to call it off. So the same also happens in an auditing as an assurance function. This kind of relationship also exists, of which in our case, for example, if we are to do the audit of the financial statements, the historical financial statements, the car upper will be representing our financial statements or any subject matter to be examined or to be evaluated. The seller here represents the managers or the directors who are responsible to provide the subject matter or to present the subject matter. So this one upper will now be the directors. The buyer upper stands for the position of the users, the intended user of the subject matter, the subject matter. So the car upper is what we call the subject matter. Then the mechanic is now the professional expert, the professional accountant who is very independent and objective whenever it comes to undertaking their assignments. So it's now being engaged to come and review or examine the car. So this is now the practitioner or the professional accountant. So within that context, we're able now to understand why we need an examination, a review of the subject matter, be it the financial statements, be any kind of a matter which is of interest when it comes to decision making. So class, all assurance engagement have got 5 basic elements. So all assurance engagement has what we call the 5 basic elements. All assurance engagement, out of even the definition of the term assurance engagement, those elements do appear in that definition. So all assurance engagement has got what we call the 5 basic elements. The 5 basic elements. So the 5 basic elements, we use a mnemonic crest. Use a mnemonic crest just to memorize them. The 5 basic elements, they form a word crest. They form a word crest. The first one is that this C stands for what you call the suitable criteria. The suitable criteria. The suitable criteria. So the first element of assurance engagement is a suitable criteria. A suitable criteria. A suitable criteria. So a suitable criteria refers to the benchmark or the standard. So this refers to the benchmark. Refers to the benchmark. Refers to the benchmark. The benchmark refers to the benchmark or standard. Or standard. Or standard. Against which the subject matter is evaluated, against which the subject matter is evaluated or measured. The subject matter is evaluated or measured. So this the criteria refers to the benchmark or a standard against which a subject matter is evaluated or measured. E.g., for example, in the audit of historical financial statements, historical financial statements. In the audit of the historical financial statements, when you have to do the audit of the historical financial statements, the subject, so the criteria is, the criteria is the identified, sorry, the criteria is the applicable, identified, applicable, identified reporting framework, applicable, identified reporting framework. The applicable identified reporting framework, such as the IFRS, IAS, the gaps, etc. That's what we mean by the term is suitable criteria. So in assurance engagement, must what you call a suitable criteria, which is basically the standard or the benchmark against which the subject matter is evaluated or measured. So on that light, for a criteria to be suitable, it must possess certain qualities. For a criteria to be suitable, it must possess certain qualities. So we need to know what are some of the qualities of a good criteria. What are some of the qualities of a good criteria? So the qualities are qualities of a suitable criteria. Qualities of a suitable criteria. The qualities of a suitable criteria class. So what are some of the qualities of a suitable criteria? We do say, one, it must be relevant. Relevance, a good criteria needs to be relevant. It must be very applicable in the context whereby there is the set objective that needs to be attained. A good criteria also needs to be reliable. Reliability, something that you can depend on to measure or evaluate the subject matter. The other one, a good criteria also needs to be neutral. Neutrality, not biased. It must be capable to obtain that objective balanced reporting. Number 4 is understandable or understandability. Understandability is something that is understood by both the users and also the preparers. The other one is completeness. So good criteria ought to be complete. So those are the qualities of a good criteria. That standard of the benchmark used to evaluate the subject matter. Then you go to number 2 is R. Number 2 is R. So R is the assurance report, stroke opinion. Assurance report, stroke opinion. So this is now the document that a level of assurance is provided. So this way the practitioner will be expressing or providing a level of assurance or forming an opinion. So basically this is the document. This is a document where a level of assurance is provided. A level of assurance is provided. A level of assurance is provided, or an opinion is expressed. An opinion is expressed about the subject matter. 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 Then we go to number 3, which you have E. Number 3 is E, or 3 we have got E. So E stands for what you call engagement process. Engagement process. The engagement process stroke evidence. 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 So somewhere in our discussion yesterday, we said that auditors cannot conclude. They cannot express an opinion without obtaining an evidence. So even the assurance engagements, one cannot provide that level of assurance or form an opinion without first obtaining what you call evidence. So right that the practitioner must obtain sufficient appropriate. The practitioner must obtain sufficient appropriate. The practitioner must obtain sufficient appropriate evidence to be able to provide a level of assurance, to be able to provide a level of assurance, to be able to provide a level of assurance, to be able to provide a level of assurance, or express an opinion, or express an opinion, or express an opinion, or express an opinion. Then you go to S, number 4, S. S stands for the subject matter. The subject matter. S for the subject matter. The subject matter. The subject matter. This represents what is measured, what's measured or evaluated. What is measured or evaluated. What's measured or evaluated. What's measured or evaluated. E.g., in the case of historical financial statements audit, in the case of a historical financial statements audit, in the case of the historical financial statements audit, the subject matter is the financial statements. The subject matter is the financial statements. Subject matter is the financial statements. The financial statements. Yeah, so what is being reviewed or examined is the subject matter. So this person can be engaged to examine a number of items, like inaweza kuwa the financial statements, inaweza kuwa the internal control system is what is being reviewed. Inaweza kuwa maybe just a financial information. A financial information is what's being reviewed. Inaweza kuwa maybe the applicable legislative framework governing the entity. That's what's being reviewed. So that constitutes what we call a subject matter. Then you go to T, number 5, T. T stands for the three-party relationship. The three parties relationship. The three parties relationship. The three parties relationship. T stands for the three parties relationship. T stands for the three parties relationship. So who are these three parties in an assurance engagement? Who are these three parties in assurance engagement? So number 1 is the practitioner. Practitioner. Practitioner is the first one. The practitioner is the first one. So this one refers to the professional accountant. This refers to the professional accountant. This refers to the professional accountant who evaluates the subject matter, and provide a level of assurance. Who evaluates the subject matter and provide a level of assurance. Who evaluate the subject matter and provide a level of assurance. So that's the auditor. Auditor, as a professional accountant, is being engaged to come under, do the job, so as to provide a level of assurance. Number 2, we have the responsible party. Responsible party. So this refers to the person. This refers to the person who measure and present the subject matter. This refers to the person who measure and present the subject matter. This refers to the person who measure and present the subject matter. This refers to the person who measure and present the subject matter. So how do the directors, the managers? Like in our case, the responsible party was the seller, the car dealer. Okay, then the last one, we have the intended user. Intended user, intended users, intended users, intended users, intended users. So these are the individuals meant to use the assurance report. These are the individuals meant to use the assurance report. These are the individuals meant to use the assurance report. These are the individuals meant to use the assurance report. The individuals meant to use the assurance report. So class, those are the 5 basic elements of assurance engagement. The suitable criteria, the assurance report, the engagement of the evidence, the subject matter, then the 3 parties relationship. So any form of engagement that lacks the 5 basic elements is what we call the non-assurance engagement. So the non-assurance engagements, by their nature, they lack these 5 basic elements. Some of these are 5 basic elements. So we shall come to that. So that's the 5 elements of assurance engagement. And if you go back to our definition, those wordings are there. In that definition of the term assurance engagement, those elements appears in that definition. They appears in that definition. Like we say, common assurance engagement is where the practitioner, in terms of the 3-party relationship, the practitioner is engaged to evaluate or measure a given subject matter. So we have the subject matter that was a responsibility of another party. That's the responsible party against a suitable criteria. The suitable criterion and express an opinion. We have the opinion assurance report to provide the intended user with a level of assurance regarding the compliance of the subject matter with identified criteria. So we've done that. We've defined the term assurance engagement. You would have a discussion on the elements of assurance engagement. So next, I want us to go to examples of assurance services. 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 So if you work with an audit firm, or if it just be you had an opportunity to engage an audit firm, I'm just in the area of financial statements and reporting, we have a number of services being offered, either in the form of the advisory, accountancy, taxation, etc. Such kind of services, they constitute what we call assurance services. So you can just have a list of these services. So one, we have got auditing services, auditing services. Number 2, tax consultation services, tax consultation services. Next, we have bookkeeping stroke compilation of financial statements. Bookkeeping stroke compilation of financial statements. Bookkeeping stroke compilation of financial statements. Next, we have got human resource management services. Human resource management services. Human resource management services. Human resource management services, e.g. recruitment, e.g. recruitment, e.g. recruitment, e.g. recruitment. Next, you also have a risk assessment services, risk assessment services, risk assessment services, risk assessment services. Next, project management services, project management services, project management services. Next, we have things like property valuation services, property valuation services, property valuation services, property valuation services, due diligence services, due diligence diligence services, due diligence services, due diligence services, etc. etc. So, after that one, I want us to go to types and classification. Types and classification. Types and classification. Types and classification of assurance engagements. 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 So there are four types and classification of assurance engagement. So number one is a reasonable reasonable assurance engagement, reasonable assurance engagement, reasonable assurance engagement, vis-a-vis, vis-a-vis limited, limited assurance, limited assurance engagements, limited assurance engagement, limited assurance engagement. The number two, we have attestation engagement, attestation engagement, attestation engagement, vis-a-vis, vis-a-vis direct reporting engagement, direct reporting engagement, direct reporting engagement, direct reporting engagement. So you have attestation engagement, vis-a-vis direct reporting engagement, vis-a-vis direct reporting engagement. You want to break for prayers? Okay, so we can take 10 minutes break for prayers, then we'll be back. We'll continue our discussion on the types and the classification of assurance engagements. We have the sound back. Yes or no? Yes or no? Okay, yes. So let's continue. So let's begin with the reasonable assurance engagement and limited assurance engagement. So getting these terms, what they mean, in a challenge for most of us is Nombia Komba explain the term reasonable assurance or limited assurance engagement. Then you get stuck. And you even sometimes wonder, what are all this? What are these reasonable assurance and limited assurance engagement? So one of the easiest way to get the meaning of these two wordings up, easy forms of assurance engagement. Huwa naambia watu wengi is about mastery, what we call assurance. One of the words is assurance engagement risk. Assurance engagement risk is what you need to be able to always remember when it comes to explaining this reasonable or limited assurance. And this is the first one. The second one is about expression of opinion. Expression or forming an opinion. Forming an opinion. So once you have these two words, you can explain what is a reasonable assurance engagement or limited assurance engagement. So before even defining this wording supper, I want us to understand assurance engagement risk. Yes, when we began this class, I explained that assurance is anything done to provide some confidence or to give certainty about something. We know what's an engagement is being given some services or being given some work to do. Then we have the risk. Risk is a probability or a failure or something happening. Like if you're setting that you want to achieve 1, 2, 3 objectives, there's a possibility you may fail in achieving the set objectives. So risk is just a probability or a failure that prevents maybe an individual to attain 1 or 2 of the set objectives. 1 or 2 of the set objectives. So in audit, auditors, they've been engaged. All the practitioner accountant has been engaged to provide a level of assurance, to form an opinion. There is objective of something. There is the objective or aim of something. This person should be providing some confidence, some level of assurance that provide confidence to the users of the subject matter. But this person might fail or may give inappropriate opinion or inappropriate level of assurance. That aspect whereby the practitioner provides inappropriate opinion of the subject matter. Whenever it's materially misstated, we refer to it as a assurance engagement risk. So assurance engagement risk is the chance. It's just the chance. Is that chance that the practitioner may provide inappropriate opinion when the subject matter is materially misstated. Whenever the subject matter is materially misstated. So that's what we mean by the term engagement risk. The chance that the practitioner may provide inappropriate opinion when the subject matter is materially misstated. Yeah, so the chance that the practitioner may provide inappropriate opinion when the subject matter is materially misstated. And what causes these material misstatements are errors and what? Fraud. Errors and fraud. So there's a possibility he may fail to detect errors and the fraud contained, for example, the financial statements, hence providing a wrong opinion. Like could be saying, but the financial statements do reflect a true and fair view, which is not the case. It is not the case. Or it could be saying, the financial statements does reflect a true and fair view. So that aspect of giving inappropriate opinion is what we're referring to as what? Assurance engagement risk. Assurance engagement risk. Assurance engagement risk. We have got three components of assurance engagement risk. There are three components of assurance engagement risk. There are three components. We have three components of assurance engagement risk. Assurance engagement risk. There are three components of assurance engagement risk. We have three components of assurance engagement risk. So number one is inherent risk. Number one is what we call inherent risk. Number one is inherent risk. Number two is control risk. Control risk. Number two is control risk. Number three, or C, is what we call detection risk. Detection risk. So there are three main components of assurance engagement risk. What you call inherent risk, control risk, then detection risk. These two upper, the inherent and the control risk, are referred to as the risk of material misstatements. These are two, inherent and control risk, are referred to the risk of material misstatements. The risk of material misstatements. So the practitioner has got no control of the risk of material misstatements. The one who prepares the subject matter is the one who has the control of these two risk components, inherent and control risk. The responsible party are the ones who are in control of inherent and the control risk. Auditor is only responsible for this. This is what auditor has control, or the practitioner has control of this, has control of what we call detection risk by designing appropriate procedures to be able to detect those form of material misstatements. So that's what we mean by the term assurance engagement risk. Assurance engagement risk. We shall be discussing risk is a very major component of an auditing exam. We always expect that examiner has to test us on something to do with the risk factor, the audit risk matters. So we shall still be able to interact with these types of risks upper so that we get to know them better. We get to know them much better. So we get to know what's the meaning by the term inherent risk, what's meant by the term control risk. So that's the kitu ya kwanza, assurance engagement risk. Then next we have what you call in expression or forming an opinion. So class, the aim of this, all these two engagements upper, the aim of a reasonable assurance engagement and limited is just to reduce this assurance engagement risk to low level. We try to reduce them to low level as the basis of expressing or forming an opinion. As just a basis of expressing or forming what? An opinion. So in both cases, the aim is just to reduce assurance engagement risk to low level. This chance of expressing a wrong opinion or inappropriate opinion to low level, all of them. But kuna slight differences. When it comes to the risk, this one upper, the risk is normally very low. The acceptable assurance engagement risk under reasonable is a very low. While under limited assurance engagement is normally greater, is higher as compared to reasonable assurance engagement. Then in terms of the opinion, on the reasonable assurance engagement, the practitioner provides what we call positive opinion. The positive opinion. While in a limited, he provides what we call negative opinion. So negative opinion is expressed under a limited assurance engagement. Most of the time, when we say that these are positive opinion, these are negative opinion, we tend to think that negative is also a bad opinion. No. Negative is not a bad opinion. Neither is a positive a good opinion in all circumstances. So positive can also be something favorable, or it can also be what? unfavorable opinion. The negative can also be favorable, or it can also turn to be what? Unfavorable. Sasa, there is a standard wordings in auditor's report or the practitioner report on how that opinion is expressed. So thank you. So there is in the report, there is a standard wordings, how practitioner expresses what you call reasonable assurance engagement by providing a positive opinion. So the standard wordings upper for positive opinion, this person will be saying that, in my opinion, the subject matter does reflect a true and fair view. Or in my opinion, the subject matter does not reflect a true and fair view. So that's about reflecting a true and fair view, or does not reflect a true and fair view. That's the wordings in the report of the practitioner under any form of a reasonable assurance engagement. Then upper in negative opinion, the standard wordings in the report will be like this. Nothing has come to my attention to cause me to believe that the subject matter is materially misstated. Yes, nothing has come to my attention to cause me believe that the subject matter is materially misstated. So in a simple way, positive opinion is provided under what we call reasonable assurance. Alafu limited assurance, we provide negative what? Opinion. So should even come across a question that wants you to explain within the context of assurance engagement, what's a positive opinion? What's a negative opinion? You say, yes, positive opinion is provided under reasonable assurance what? Engagement. The negative opinion under limited assurance engagement. So let's write something on the limit, reasonable kwanza. Let's begin the reason. Let's begin by the definition of reasonable assurance engagement. So how do we define the term reasonable assurance engagement? So this is the definition. Reasonable assurance engagement, reasonable assurance engagement, reasonable assurance engagement, reasonable assurance engagement is where the objective is a reduction of assurance engagement risk, of assurance engagement risk, of assurance engagement risk, of assurance engagement risk to an exceptional, to an exceptional, to an exceptional, to an exceptional, low level in the circumstances, as a basis for positive form of expression of opinion, of expression of opinion, of expression of opinion, of expression of opinion, of expression of opinion. Then let's go to the limited assurance engagement. Limited assurance engagement, limited assurance engagement, limited assurance engagement. This is an 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 assurance engagement. Where the objective is a reduction, where the objective is a reduction, where the objective is a reduction of assurance engagement risk, of assurance engagement risk, of assurance engagement risk, of assurance engagement risk to an acceptably low level, to an acceptably low level, to acceptably low level, to acceptably low level in the circumstances, in the circumstances, in the circumstances, but where the risk is greater, 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 but where the risk is greater than in a reasonable assurance, than in a reasonable assurance, than in a reasonable assurance, engagement, than in a reasonable assurance, engagement, engagement as the basis, as the basis, as the basis, as the basis, as the basis for a negative form of expression, for a negative form of expression of an opinion, for a form of expression of an opinion, for a negative form of expression of an opinion, for a negative form of expression of an opinion. Or negative expression of an opinion. So let's now have a look at the differences between reasonable assurance engagement and a limited assurance engagement. Differences between a reasonable assurance engagement and a limited assurance engagement. Differences between a reasonable assurance engagement and a limited assurance engagement. Differences between limited assurance engagement, sorry, a reasonable assurance engagement and a limited assurance engagement. So what are the differences between these two forms of engagement? We can have a table on first column, the basis of the distinction, the basis of the distinction. Then we have here reasonable assurance engagement. Then this side, limited assurance engagement, the limited assurance engagement. Okay, so number one here, we can start with the meaning. Meaning. So meaning. So, okay, under reasonable assurance engagement, Andika, it provides a high level of assurance. It provides a high level of assurance. It provides a high level of assurance. It provides a high level of assurance that the subject matter, it provides a high level of assurance that the subject matter conforms, that the subject matter conforms to specified criteria, to specified criteria, to specified criteria. It is often expressed positively. It is often expressed positively it is often expressed positively. It is often expressed positively, e.g., open quotes, in our opinion, open quotes, in our opinion, the financial statements are fairly presented. In our opinion, the financial statements are fairly presented. In our opinion, the financial statements are fairly presented. In our opinion, the financial statements are fairly presented. Then you close it. The other side, under limited assurance, it provides a moderate level of assurance. It provides a moderate level of assurance. It provides a moderate level of assurance. Open the bracket, lower than reasonable assurance. Lower than reasonable assurance. Lower than reasonable assurance. Lower than reasonable assurance. Close the bracket. Close the bracket. Close the bracket. That nothing has come to the auditor's attention. That nothing has come to the auditor's attention. That nothing has come to the auditor's attention to indicate material misstatements. 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 The conclusion is expressed in a more cautious or negative form. The conclusion is expressed in a more cautious or negative form. In a more cautious or negative form. Or a negative form, e.g., open quotes, based on our review, we are not aware of any material misstatements. Based on review, we are not aware of any material misstatements. Based on our review, we are not aware of any material misstatements. Based on our review, we are not aware of any material misstatements. Then you close it. So the next number 2, after the meaning number 2, is a level of assurance. Level of assurance. Level of assurance. The number 2 is level of assurance. So up we have high assurance. A high level assurance. This side more of assurance. Number 3 is the level of assurance. Level of assurance, engagement risk. The level of assurance, engagement risk. The level of assurance, engagement risk. Yeah, the risk is very low. Is low. This side are high. High. So then next we go to examples. What are the examples here? Sorry, number 4, examples. Examples. So examples here we have the statutory audit. Statutory or external audit. External audit, the statutory or external audit as an example of reasonable assurance engagement. This side, we have a review engagements, review engagements, review engagements, review engagements, e.g., budgets, the budgets, forecast, the forecasts, the forecast, interim audit, interim audit, interim audit, etc., interim audit, etc., interim audit, etc. Next basis, sorry, next difference area, next difference area, number 5, is extent and nature, nature of procedures performed, extent and 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 nature of procedures performed. So under reasonable, extensive procedures, extensive procedures, risk assessment, compliance, testing, substantive procedures, yes, the substantive procedures, analytical review procedures, analytical review procedures, analytical review procedures, inquiry, etc. Inquiry, etc. Then this side we have got limited procedures, e.g., e.g., inquiry, and analytical review procedures, and analytical review procedures, review procedures, inquiry, and analytical review procedures. The other one is a form of opinion. Another one is a form of opinion expressed, form of opinion, expressed. The form of opinion expressed. So here's a positive opinion, this side, negative opinion, so positive opinion, then negative opinion. The other one, we can look at also the confidence to users, confidence to users. So 7, confidence to users, confidence to users. So this one is a greater confidence to the users. This one is a moderate confidence on the users, moderate confidence to the users, moderate confidence to the users. So that's what we have on what we call reasonable assurance engagement and a limited assurance engagement. So those are the differences between the two. So an audit, external audit, is an example of a reasonable assurance engagement. Alafu this side kuna interim audit as a limited assurance engagement. A limited assurance. Was due to Libertia at what point? 741. 740. Okay. So just on absolute assurance, you say is 100% correct. Your subject matter. In any room kwamba there is an error or any form of the fraud. It has been proven to be 100% correct and true. Well, reasonable, it's not 100%, but you go fairly presented. We have got some doubt there is certain form of a misstatement somewhere. There are some errors or the fraud that were not detected, but they're not very material. They're not very significant. So nowadays, auditors provide what you call a reasonable assurance. So I want you to add something there that auditors are expected. Auditors are expected. Auditors are expected. Auditors are expected to provide a reasonable assurance. To provide a reasonable assurance. To provide a reasonable assurance and not absolute assurance. A not absolute assurance. A not absolute assurance. Due to inherent limitations. Due to inherent limitations. Due to inherent limitations in audit. Due to inherent limitations in audit. Due to inherent limitations in audit, which include, which include, which include, which include, which includes, number one, use of selective testing, use of selective testing, use of selective testing, use of selective testing, in bracket, sampling technique, in bracket, sampling technique, sampling technique, in bracket sampling technique. Yes, auditors just do the sample test. So out of a given population, not all items, not the entire population items is examined, less than 100%. So there's a possibility the one that were not selected is upon some form of what? Misstatements. Number two is a possibility of pollution. Possibility of pollution. Possibility of pollution. Possibility of pollution. Sasa yun imply parties that commit a fraud, they always collude. And that's one of the reasons why detection of fraud becomes so difficult, due to the aspect of any pollution. People conceal the loopholes, so it becomes so difficult to detect the fraud. Our next, use of judgment in gathering and evaluating evidence. 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 Next, much of the evidence available to the auditor, much of the evidence available to the auditor, much of the evidence available to the auditor, much of the evidence available to the auditor is more persuasive than conclusive. 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 Next, characteristic of the subject matter. Characteristics of the subject matter. Characteristics of the subject matter. Characteristics of the subject matter. That there is a chance not to have a general agreement. There is a chance not to have a general agreement. There is a chance not to have a general agreement. There is a chance not to have a general agreement. Then the last one, inherent limitation of the accounting and internal control system. Inherent limitation of the accounting, inherent limitation of the accounting and internal control system. Inherent limitation of the accounting and internal control systems. So those are reasons why auditors can't provide absolute assurance. They cannot give absolute assurance, but only provide a reasonable assurance. This is now what you have on a reasonable assurance and a limited assurance. So number two is what we call any direct reporting. No, it was attestation engagement and direct reporting engagement. So that's number two now, classification. Attestation engagement and direct reporting engagement. Attestation engagement and direct reporting engagement. Attestation engagement and direct reporting engagement. So because of time, we will not have that discussion this evening. We shall pick that one in our next lesson when we shall be a meeting. As I can see, Beldina gonna a comment here. Beldina has a reservation kwamba will you at least change the time? Sunday we lose a lot place. Okay, Beldina, that's a subject of a discussion. We shall explore that, then we shall be able to provide a feedback on that. So thank you so much. Enjoy the rest of your Sunday evening. Tupatane, inshallah. Our class has come to an end. Somebody is so interesting hapo anasema we suggest we have a double on Saturday. Okay, so yes, a double on Saturday. Okay. So being that's noted, we shall see something about it. Okay, so double is a disaster. Okay, double, so goodbye. Yes, Tatuma powers up. Yes, I'll send that. So you can share the differences on those two for the group if you have the differences between reasonable assurance and limited assurance engagement.